What is up, everybody? Happy Sunday. Quick audio, video check. Everything coming through A-OK. Looks good on my end. How are we all doing? How was everyone's week? I don't know about you guys, but I almost fell asleep until Thursday morning when this market finally decided to do something. Break out of this range. I know we pretty much we're just lingering at these range highs going back to FOMC from December and even from a few weeks ago at the end, towards the middle to end of January. Not a lot had happened. If you guys remember, we pretty much had been like gapping down, grinding back up throughout the week, and just being stuck very range bound. And I said last Sunday, if you guys want to watch it back, the market was basically going to be at a decision-making spot where it really had to make the assumption, are we going to buy the all-time highs or are we going to sell off from this high volume edge here and fall back into the range of indecision that is where we currently are? If you struggled on Friday, don't beat yourself up about it. That's OPEX Fridays as a whole are just going to be difficult trading opportunities. I think if you guys watched the lunch hour on TopstepTV, I think Jack and I did a decent job of trying to articulate what was happening in the market, where we may go. And if you remember, I was screaming like there's a good shot we could bottom here around the 600 strike on SPY, which is exactly where we closed. If you want to check it, actually just under it. So we didn't even monetize the 600 calls technically, or maybe for a few cents, but the kind of a wild Friday, kind of one where it looked like, options really were moving the market and causing everything and anything that did happen on Friday. So going into this week, yeah, we're in the dead center of the FOMC candle. It's kind of like a good laugh when you really look at it. It's like literally a 50% retracement almost. Made me laugh when I was kind of eyeballing a few things. But, how did everyone do last week? Before we kind of jump in here and get some of my thoughts on ES and NQ, how did we handle the lackluster first couple days of last week? I know it was a shortened week. We didn't really trade on Monday, but then Tuesday and Wednesday were absolute snooze fests. Thursday looked like we were going to get the Friday move. And then, of course, naturally, we just kind of rebid and fell right back to kind of the point of control from the previous week until we once again sold off and, had that violent Friday. So I'm curious how everyone handled a true, if you want to look at a 5 minute, not a 5 minute, a 21 EMA on a 5 minute. I mean, that is about as typical a trend day down as you could possibly get. Like, we just stayed on one side of that, EMA, which is a good indicator of on like a 5 minute chart. If you are a day trader, of something that you can use to understand, are you on the right side of momentum when you are day trading, or are you potentially fading a trend, or are we just chopping in the middle? So I think there were plenty of opportunities, even if you were looking for long. If you're trading the Nasdaq, I think it was giving you a decent amount of 20 to 50 point moves at any given time, even in that reflexive bounce that we were kind of seeing. So the opportunities hopefully will continue here as long as volatility stays bid as it currently does. So yeah, I'm very optimistic that we may get some little bit of continuation. it's hard to really bet on that when I'm looking back and kind of eyeballing, where we are in this range that we've kind of been in for the last month plus. You're at the bottom edge of it. You could go a little lower, absolutely, but for the most part, the market's got to get through a very large psychological number at 6,000 on SPX as well as ES to really get more room to the downside. Looking at this week, it's a tough call. You really want to see, do sellers get continuation into the early parts of tomorrow's session? And then do we get a typical, without a real catalyst, without any sort of major news, do you get a turnaround Tuesday? Do you get a bit of an excess low in the first part of tomorrow's session or even into Tuesday? And then do we rebound and kind of sit in this range, continue to sit in this range until there's new information or new things to digest? Typically, if you are a fan of seasonality, this is a very violent time of the year. Right after February OPEX, things can get a little weird. So it just historically, a lot of corrections for some reason seem to happen end of February into early parts of March. I always know this because my dad's birthday is actually in the early parts of March, and he always likes to say, and he's always been somebody that's been in the markets for his entire life, that the market always loves to sell down around his birthday. So I always just keep that in the back of my head, even though some years we do not give an absolute crap about seasonality. It's something I'm just aware of. And when you get, as we've always talked about on the show, when you get that break of balance, and it could be a wider range like we've kind of been in on ES, or even something as tight as this, where once you do finally get that true break, you don't really want to be the first person to fade it, or you don't necessarily want to fade it in that session. So this was why I was kind of saying, like, that's about as true as of a trend day down as you could ever get, because there really was no V-shaped move back up. There was a few opportunities, like I said, in NQ, but on ES, this was about as typical of a down day as you could ever get, where you got that true move down. It was super orderly. This was not violence. This was not, you're just getting absolutely run over if you tried to long it. It was very just kind of stepping down throughout all of Friday's session. And there really were some good opportunities that you could have gotten in short on a reoffer, a decent few 10 to 12, 15 point pop on ES, and you could have reshorted it and, kind of trailed your stop down. So that was Friday. And looking at this week, as I said, when we break that balance and you kind of close on the lows, you got to take it seriously. Yes, we're at the bottom edge of this wider balance range, but I'm not going to be the first person to try to say, yep, it's time to buy the dip immediately. I would love to see this. Does this potentially rotate a little lower? As I said, a few weeks back at this point, it's still eyes down here as far as like where the correction may truly stop is going to be somewhere down towards that 5,900s, down all the way possibly to that election low area down here below 5,800s. That November 6th evening when we just shot out of a cannon is just something you guys should continue to have kind of an area marked on your chart where I expect it to still be fought and the dip to be bought down there until we really get a catalyst to move lower. You're kind of erasing the last 4 months of gains if you really were to lose that spot. So I just keep that marked. I don't think you're going to get there this week unless there is an external catalyst personally, but weird things have happened. Like we just had a good 2% almost move down on Friday. So if there really was something with some real violence here, you really just want to let it kind of do its thing or jump along short and kind of ride it down until we actually find buyers, which I think is going to be a little lower. But keep in mind, we are about 15 points away from the large option strike, I think, that I was talking about on TopstepTV on Thursday, as well as even during the lunch hour on Friday, which is the SPX level of 6,000. And I say this and I bring this up because it is a massive like options wall that I'm seeing as far as this activity on both sides of the chain. So it most likely is going to act as a bit of resistance in the time being, unless there is something real that moves us down further. Right now, going into tomorrow's session, that spread should be roughly 15 to 13 points. I just think it may hold in the early parts of this week, and we could be range bound without new information. You could just put this entire move from Friday down to OPEX shenanigans, and we just continue to kind of be balancing in this range. That's kind of how I'm looking at it. I'm not looking for absolute Armageddon by any means, but looking at this week on ES, my weekly pivot is going to be back at the kind of 60 50s area on SPX. So it'll be roughly 60 65s to 60 60s on ES is an area I want to see buyers get back up above and hold for me to really want to look at longs continuing in this area. And that's where we've kind of been for the last few weeks. So for us to basically get it back above the previous week's, not the previous week, 2 weeks ago's value area high, or excuse me, back into 2 weeks ago's value area, as well as even the point of control going back a few weeks. And it's that same kind of choppy garbage price action that we were seeing between kind of the 670s, 6070s and 6100s basically. So you'd want to see buyers get above that and start to hold if you are trying to still be, bullish all the way to the all-time, to making a new all-time high. But as I said, outside of scalps and things like that, it's hard right now in the early parts of this week to want to fade this type of break of balance and move back down. We couldn't make a new all-time high. You weren't finding buyers up here. So for the time being, do we get a reoffer in this spot? It's entirely possible. So I do see a question asking me about why we had a correction on Friday. Is this a normal sell down on a Friday, or was it news and data? There wasn't really much news. There was a few things coming out of the new administration, but nothing that really was causing this. Because it was so orderly, guys, this was really just, there was nobody on the bid, and a lot of this was very much options driven, at least on the larger ETFs and just the ETFs, really. That's really how I was looking at this. And then obviously single stocks can affect it too, but I really was looking at this, and I mean, it's hard not to when you see us close like right at SPY 600 and not say this was options driven of a move down. Just given how balanced we were, and that we kind of, basically rotated that entire value area in a single session, which shocked me, to be honest, but it really took a good one sell and nobody really being on the bid to make the move. So I chalk this up to, for the time being, at being very options driven. It completely could be erased in the early parts of this week. I am not the biggest fan of trying to buy the dip in theory after a move like this on a Friday in the early parts of Monday's session. A lot of the time you do get some aspect of continuation. It could be on Sunday nights. It can be early in the Monday session, and then we start to build a recovery. And then you get the stereotypical turnaround Tuesday where we do actually make a decent move back up. But I take those moves down on Friday seriously. A lot of the time you do get some aspect of continuation, but like anything else, trade your setups, see what the early part of tomorrow's session and this evening session really look like, and we kind of go from there. Obviously, we're gonna reset, and I'm actually going to be on the opening call with Hoag and everybody tomorrow morning, so we'll get a deeper look at this again and talk about where we may go, or how the overnight session went, and how we can actually eyeball some things for the early part of a Monday's session. So I will be doing that with those fine folks tomorrow morning as well. So get another quick deep dive from me with the overnight session taken into account as well. So as far as ES, like I said, if we were to reoffer here, I would expect the bottom edge of this balance area for the last few weeks, these week lows down here towards the, below 6,000, as well as going all the way towards this point of control area down here towards the 5950s, 5960s, I would expect to be defended in the current state of things. So if we got to move down there, or we got to reoffer up here, I would expect continuation a little bit lower below 6,000 before we might find some buyers. To the upside, if we continue to build volume above my weekly pivot here, I'd be looking to ride longs back towards the bottom edge of this value area. And it's kind of those old highs I think we were talking about a few weeks ago, up here towards kind of the 6120s to 6125s. The bottom edge of here, 6130s, was heavily reoffered, and we just cannot seem to build volume above kind of that 40 spot. I know we had a lot of pops, little things up there, even towards the 6160s area, but it very much was close. At the end of the day, it was, options driven in the last 10 minutes. It was MOC, things like that, kind of just pushing us up. You really were not finding buyers there in RTH. You were finding sellers actually continuing to kind of reoffer up there. So I'm taking that seriously is what I'm saying. So bit of a gap up on NQ. I was going to ask gap up, gap down, flat, open, small gap up. It looks like NQ trading around 21,700s to start the session. We're going to go there here in a second. ES slightly gapped up towards the 60-40s and is kind of just, chopping around from there. So let's jump to NQ. And as always, guys, if there are questions or anything I am going over talking about, please throw them in the chat. We will grab them. We will grab them and I will get to them towards the latter half of the show, unless it is kind of relevant to what I'm talking about. But yeah, NQ looks a little more violent, but it is pretty much back to the scene of the crime that we've been in for the last few weeks. I feel like we keep either talking about the 550s to 570 area on NQ, or we keep talking about around this 800s spot in the 21,000. So that's kind of a decently wide range that we could continue to balance in the early parts of this week if we don't get a more violent move down. Currently, we are trading in kind of this low volume part of the last month of a volume profile here. So you could find sellers continuing to kind of re-offer anywhere between basically where we are now at the 700s and all the way back up to probably 790s that you could find people looking to re-offer in that area. If we get above 800s, you'd want to see sellers continue to push and get us back to this old number that we kept talking about, that 830s to kind of 850s spot on the Nasdaq, where we just were finding a lot of resistance, as well as even buyers kind of stepping on the gas there and trying to push us up into the 900s. So kind of a no trade area, if I'm being honest, at least for me, is this little spot here. It's more of a wait and see who's in control, see who's got momentum in the early parts of tomorrow's session. If we were trading here, I have no interest in really initiating in this spot personally. I'd much rather be kind of watching and seeing, can I get can I get a part of a short down towards that 550s to 570s kind of spot here, this other high volume edge, or am I going to, find buyers stepping in kind of the lower 600s for that trip back up towards the 8s? So NQ kind of in that tough spot. It's almost in the dead center of this, a little lower, obviously. But when you look at the last few weeks, we've traded a ton of volume in this area. Obviously, like I said, back towards the 550s to 600s is going to be that larger spot that I could see us kind of falling to, that you could find some chop, find some indecision, but definitely could provide a decent buying opportunity down here for a rotation back towards the 780s to 800s. So NQ, like I said, being in that middle of the range, if you got that larger move down, you would expect to find buyers again down here towards the 21,800s, perhaps even as high as kind of the 450s. In this low volume edge here, you could find people stepping in. But for the most part, if we get continuation and we cannot hold 550s, it's a short, absolutely down towards the 400s. That's a decent trade that I'd be trying to get on the Nasdaq. But when you look at this volume profile, I mean, guys, we're in the dead center. Not exactly the point of control, but you are in multi-weeks of balance in the absolute middle. That's why I'm kind of saying, for me personally, more of a no trade spot outside of a scalp. If I'm watching price action, if I'm watching order flow and I see something that makes sense, yeah, I'll initiate in this area. But for the most part, I'd rather be sitting on my hands and kind of waiting for, potentially a dip to buy at lower prices, or jumping on longs if we can build volume a touch higher than this. So from there, like I said, above 800s, 840s, do you get a move back up towards 22,000, perhaps the 950 area on NQ? If you lose it down to 400s, if that doesn't hold, you start talking about all the way down towards the 21,200s, perhaps even lower, testing some of these weekly lows from a few weeks ago. So tough spot. Like I said, and when you're in the middle of balance, I tend to just go with the side of momentum. Which direction are we kind of trading? You don't really want to fade it. Do you get the rest of this value rotation move? It's very possible, as I was talking about on ES, where you get that continuation after a move like this on Friday. Do you get a further move down for a little bit of continuation before we find buyers, and then continue to kind of, be range bound, balancing in the point of control area of this? So far, it looks like a sloppy typical Sunday open, little gap up. I'm sure that little gap on ES and NQ will get closed here in the early part of tonight's session. But yeah, let's jump over to gold. So for the time being, I don't know, however, if anyone traded GC. I think I was talking about last Sunday when we had this large move down from last Friday, or 2 Fridays ago, technically, that I was looking for us to peak inside kind of 2,900, perhaps even a little bit lower. Did we go back and kind of retest the previous week's low? We kind of did. You found buyers before that. I was personally looking for a long, a little lower than this, kind of down towards, I think the lower, like the mid 2,800s, I think I was kind of talking about last Sunday, if you got another move down, but boy, did we find buyers at 2,900. And now we're talking, back here at the all-time highs and a lot of indecision when I'm looking at this. So personally, I'm not comfortable longing up here. You really don't want to get chopped up in here unless you kind of get above 2960s and you try to play that breakout maybe to 3000s. I don't know if it's going to come this week. I personally think there's a lot of indecision up here, and you keep finding people either taking profit or sellers offering, but times of uncertainty, I just don't love the idea of shorting gold, but it's just kind of in a tough spot. If you wanted to get long and you were looking for that trip to 3000s and you don't want to wait potentially for that rebid to come inside of the 2800s, let's say, if you didn't get that larger move down, in which case are we talking, an actual reset down to maybe 2800 or back into 27s to kind of really retest this breakout, then you'd at least want to wait to see if we find buyers again in the lower, the value area low of the previous week. Even having this point of control from 2 weeks ago as your kind of backstop as well, down to the 2930s, you'd feel more comfortable kind of longing in that area between 40 and 30 to try to get that larger move back up. As I said, I just personally don't love looking for outside of a scalp here and there. You guys do what you do. But on a larger kind of swing time frame to look for that long to 3000, I'd much rather be looking for a safer opportunity, a touch lower, outside of the momentum trade. What last week's profile tells me is there's just a lot of indecision currently. We haven't quite found the oomph that buyers need to make that push. So maybe we need another move down to kind of retest towards 2,900 before getting the momentum to do it, or do we just start building volume above 2960s and get a violent breakout move towards 3000? I would bet on that, but I'm just not going to be, looking to long it up here personally. It just looks like there's a decent amount of, the buyers are just kind of running out of steam currently. It just would take a decent move out of that to really get that breakout 40 points higher. So we'll see. Personally, as I said, you could probably take a stab long between that 2940s to 2930s, maybe even a little lower if we kind of retest some of the early parts of last week down here towards 2910s, or even down towards the 2890s. Like I said, last week's low as well as the previous 2 weeks or 3 weeks ago's point of control down there. So you can feel safe at least taking the stab long here. If you were doing it at a knife catch on a larger move down, I would tell you be hands off, let it continue to kind of find its footing and then get long again. Currently, it looks like they're going to try to build volume up here and possibly go for the breakout in maybe the early parts of tomorrow's session, but we'll see what the overnight looks like. Yeah, GC was gross on Friday. It looks gross all of last week, to be honest, looking at the hourly chart. Outside of the breakout move there, it looks a little sloppy the last few sessions. As I said, indecision currently. Oh, Crude, you broke my heart. So, last week, we were talking about potentially, are we establishing a new balance range here? If you guys remember last Sunday, I was saying like there could be a decent safe long here at the top edge of the old balance range, going back to November, December, October, September, August, that like 4 month balance range that we were in between 67 and kind of 71s. I said you could kind of feel safe at least trying to long it. You didn't get the full move. I think I was talking about, do we start establishing a new range between kind of 72s and I think 74s? I think we made the attempt and we found a lot of sellers towards the latter half of last week, but we're right back at the exact same spot when we were talking last Sunday about, is this the new bottom currently for crude right here around kind of the 70s to the mid 69s? And if that's the case, once again, you got a decently safe long here, knowing you have that balance range kind of below you. Do we get, once again, that rotation back up here? And do we truly start establishing this new range between the 70s and 73s? Maybe it's not going to make it as high as 74s, but maybe that's the new range until crude makes a new decision. But that's kind of how I'd be looking at this, but you'd have to be careful that you might fall. Actually, isn't crude in rollover? Did we just roll over? This looks a little different. Or am I crazy? I don't know. Doesn't matter. I don't think so yet. Maybe it is going in next week. But as I said, knowing you have this range from hell down here kind of as a backstop where you had a ton of buyers down towards kind of the mid 69s, you can, like I said, feel at least a little confidence trying the long here for that value rotation of the previous week. And maybe we just kind of are range bound in that 70 to 73 point range until there's new information, until we get new conflict in the world or new jargon about drill baby drill for the time being. That's the only way I could read this. I really wouldn't want to short it here for a trip back down to a ton of volume for months and months and months. Thank you, Coach Hoop. It is in roll. So that's why I think it's top of mind for me. I feel like I was reading that crude was about to roll over or had a settlement or something for the March contract or April contract, whatever one it is. So thanks, Coach Hoop. Smarter man than me right there. So as I said, knowing that you have that balance range, you could take a stab long here for that rotation, possibly back up this week to 73s, maybe even as high as 74s if we can get some momentum here. But for the time being, I don't really know which direction crude's going to go, but I would just, as a trader looking at this, knowing you've got all that volume sitting just below here, you could take that swing time frame type long for that move back up, just like we saw last Sunday in this exact same spot. Is that a new floor? That's kind of what I'm leaning towards, but we'll have to see as we kick off this week if we continue to build volume above that low around 70. So far, it looks like it, since we kind of, I guess, gapped down a little bit and then have just been building steadily above 70 cents. So yeah, it's on the Globex high. It's still sitting right around there. And it looks like it's about to continue. So that's crude. Jump back to yes. So far, making a little move higher here after the gap up, continuing to build volume. As I said, an area to watch in the early part of this week is going to be that kind of 64s to 60s spot, depending on the spread. Like I said, I'm basing this off kind of the 60-50 strike on SPX. So roughly it was about 15 points of spread on Friday. I'll probably shrink throughout this week. That's why I tend to keep a lot of my pivots, if they are options based, are going to be, between about a 4 to 5 point spread down to 0. So I kind of box it as it's going to slightly move throughout this week. But still, I like to interact with that logic more as a range rather than a horizontal line at a specific price, because, there's always new data to think at or look through, or, price action is going to tell us when in theory price gets there, how to interact with that spot, what makes the most sense, who's in control. That's why I kind of box it most of the time. So yeah, let's jump over to earnings this week. So, there's a couple things going on. Coach Hoop. Well, at least you're honest, sir. I guess natural gas is in rollover. Crude is not quite there yet. Anyway, looking at the earnings for this week, this is the Super Bowl of single stock earnings for a lot of names. I think that people love to do short dated options on, and apparently love to get volatility crushed, or theta'd as a new terminology that is coming into the world, where you decide to bet on earnings when the implied volatility of single stock options is insanely high. And even if it goes in the direction of your calls or puts, they actually are significantly less valuable the following day because of a thing called volatility crush. So if you are a single stock options trader, there's a lot of names here that you probably have played around with or have looked at before. Everything from Domino's to Hims to Nancy's new favorite toy, Tempest AI. We've got Zoom, you've got Kava, you've got Home Depot. Our AMC apes, are they still out there in the world, or are they still holding on for the next short squeeze that will never come? You've got Lucid, but the elephant in the room is staring us right in the face Wednesday afternoon with a couple large software names, as well as everybody's darling Nvidia. So kind of why I said you may get some continuation in the early parts of this week or early parts of Monday, but then I would expect us to just kind of be range bound until Nvidia, to be honest. It just kind of fits the narrative of like, you may get continuation Monday, you may get a slight turnaround on Tuesday, and then we just may be indecision and balancing, chopping until we have Nvidia, Snowflake, and Salesforce personally reporting earnings after the close on Wednesday. Obviously, Snowflake and Salesforce not going to move the indices the way Nvidia is going to regardless, but Salesforce still a larger name in the Dow. Snowflake's still a good pulse check on the software as a service organizations out there in the space. And obviously these are some of the larger names and can obviously move the markets and move specific sectors and how they affect, how what we can look at with things like company spending and things like that for their business applications. Nvidia is still going to be the only thing that people care about at the end of the day. But after the DeepSeek narrative, I'm very curious to actually hear their earnings call more than anything, how they guide, how they're looking at this. I feel like we erased all of that. Nvidia basically trading back around the 140s. So it'll be a very interesting week, but it just kind of fits that narrative of continuation, move back up and balance. And then we will probably get the real move after Nvidia reports. And then to round out the week, you've got Dell. I'm sure for Fridays before open, I'm sure Fubo TV is going to provide some of our single stock traders, as far as options activity, another opportunity to place some degenerate trades into Friday's earnings. So it's just that kind of week where, like I said, I don't think the market's going to be waiting for Nvidia, but I do think it may potentially stall towards the latter half of Tuesday into Wednesday, unless there's news, unless our president decides to say more things. It's just something that could just put the market on pause until they do report. We'll see. I don't know. This is a fun week of earnings. Like I said, a lot of large names to pay attention to, but all eyes are still going to be on the CEO of the Nasdaq SPY and now the Dow as well, Nvidia. So that's earnings for this week. It should be a fun one. If anyone trades single stocks, this is still just a fun week. There's just a lot of good names. Stop speculating price action. That's what we do. We are traders, sir. Let's jump over the economic calendar. So another large week of different releases, nothing we haven't seen before a million times and shouldn't be prepared for. A lot of pre-market things, starting tomorrow. Chicago Fed National Activity Index at 7:30, as well as the Dallas Fed Manufacturing at 9:30. But the biggest one here, honestly, maybe the 2-year auction at noon. So if you're gonna be trading around lunchtime, do be aware it does come out about 2 to 3 minutes after the release. And then you kind of get the algo's reaction to what the results of the auction actually were. So do be aware if you're gonna be trading around lunchtime, sometimes the 2-year, sometimes the 10-year, sometimes the long bond at 30. Can be the ones that just kind of move a little more than you'd be used to. Yes, it is based off no information, no technical analysis, just a thought in your head, just years of experience doing this, just looking at single stocks, looking at earnings and how the market reacts, how we lean into large mega caps tend to potentially stall a little bit before they do actually report. The indices do. So a little bit of an actual perspective there, but yeah, you can ignore it. You're here watching. So I guess, don't listen to me. Anyway, on Tuesday, we do have a couple Fed speakers as well as the CB consumer confidence, and we do have Fed speaker Barr and Barkins talking, as well as a 5-year auction shortly after lunchtime as well. So nothing in the pre-market that's going to be too crazy or any gotchas that will really move us prior to the New York Open, but we do have a couple of Fed speakers around the middle of the session after the Euro close to be paying attention to. And then on Wednesday, same thing, Barkin talking again. Actually, don't know which one he's speaking at, as well as Bosick. But for the most part, guys, outside of PCE, not PCE, it is PCE, sorry. Outside of durable goods and PCE on Friday, it is a lighter week. We do have PCE and durable goods and GDP and initial jobless claims on Thursday. And then going into Friday, you do have probably what's really going to move the markets is going to be core PCE. It still is what the Fed's favorite flavor of inflation is currently, as well as Chicago PMI. So that would be the biggest ones to watch going into this week. Oh God, we do have a lot of Fed speakers this week. I guess I didn't even notice that. Yeah, we got Harker, Hammock, Bowman. So yeah, we'll keep you up to date with those as well throughout the week. That's one of the good things about tuning in Topstep TV. If you are trading, we do keep you updated on our favorite Fed members as they are coming into the fold and going on their book tour and speaking at symposiums and speaking on CNBC. We do keep you up to date with when they're about to talk and if there are any gotchas in those headlines or words that they are saying. So a lighter week outside of PCE and initial jobless claims, but as always, those will likely cause some aspect of a reaction. With CPI and PPI being hot a few weeks ago, I'm curious to see what core PCE looks like towards the end of this week. So anyway, that's the data for this week. As always, we will remind you of these things as they are happening or as they are coming up as we are trading live on Topstep TV. So always like to give you guys a quick pulse check and just being aware of the major ones, which are going to be out really Thursday and Friday, but a number of Fed speakers, but the rest, nothing you should not have traded through before. So no big gotchas outside of Friday. And then we'll go to a quick snapshot on some options data as well as far as how things looked at Friday's close. So as I always say, kind of post options expiration week or month is going to be take some of this data with a grain of salt. I hate how it looks a lot of the time at the end of Fridays on options expiration, just because I think it just gets a little skewed personally. Cause you see a lot of hedging and other things that take place even outside of the 0 DTEs. So the largest elephant in the room still is going to be around SPX 6000. As I said, it's going to provide some aspect of resistance, I would imagine, unless you get a real catalyst. So that would be roughly 60 15s to 60 10s this week, depending on what that spread actually looks like. So it could provide at least an initial bounce, but if you got a real catalyst and we just kind of moved through it, it's something to keep in mind for another move back up of an area that we could potentially go target at a later date as well. But looking at the overall kind of, net gamma as well, I think I made this comment a couple weeks ago that the market really didn't look like it was very well hedged for any sort of real downside. And I always love when we have a big move down, because then I look at this and you just see a bunch of that started to actually happen as, just-in-time hedging and things like that actually become important, I guess. So I think last Sunday we were talking about there wasn't a lot of interest in downside outside of 6,000. Well, now you're actually seeing some of that negative gamma exposure come into those lower strikes back down as low as 5,800. So a lot of the time when you see this too, it just gets harder to make a real move down unless there is an actual catalyst causing it. So like I said, take some of this with a grain of salt. You still have a very large amount of positive gamma exposure up towards 62,000 as well. So I'm not ruling out all-time highs, especially if Nvidia just blows it out of the water, which who knows. But given some of the guidance of some of our largest companies in the last few weeks during earnings season, I don't really know what to expect. It could have been the most generational dip buying opportunity around those 115s in Nvidia, but we'll see. We'll see what it looks like on Wednesday afternoon. So yeah, it's a little pulse check on what we are seeing on Friday's close. As I said, options expiration. I'm going to look at this again tomorrow, and I will be on. Well, I guess I'll be on before the open, so I won't see the refresh data for Monday morning, but we'll talk about this throughout the week. I'll keep an eye on as I'm seeing things shift on these larger strikes as well. So far, this gap up pretty much just shot out of a cannon and is continuing to move higher. NQ trading around 750s, ES coming into that 60-50s area. I think that we kind of did this was where we got that, that final kind of FU move down around lunchtime. Yeah. Interesting spot here. Anyway, I'm going to get to some questions. As I said, if you've got any, as I've been going through some of this information tonight, please throw it into the chat. I will grab it and we will get to as many questions as I possibly can this evening. So I'm trying to get everybody's questions. Anyone that has a question that wants something answered, I will try to do my best to get through them all. All right. Nick, what is the conversion from SPX to ES? So it's always going to change as we get closer to rollover. Like when we go to the June contracts on ES in a few weeks, that spread could be 60, 70, 80 points, just kind of depends. And then as we get closer towards that quarter's expiration for futures contracts, that spread will basically be zero by that final Friday of rollover. So currently it was about 15 points on Friday. We'll see what it looks like tomorrow, but you would imagine it's just going to, shrink a half point every day as we get closer to that expiry. I think I kind of answered this one. Hey, Nick, I don't understand why the market needs correction. Is it a normal thing to sell down on Fridays or was it news and data? Yeah, I think I said most of this currently I would bet on being more just OPEX driven than anything else. It's hard to take it as much more of that because it was options expiration Friday for the monthlies for February. So given that it also happened with a break of this balance that we were in for about 4 days, I take it a little bit seriously, but there wasn't a major catalyst. There wasn't anything like the president said. There wasn't new, crazy tariffs or anything that really spooked the market. It was just very stair-step down, orderly selling that just continued to kind of gravitate towards some of the larger option strikes that we were seeing. So, as I said, I would just currently look at it as that unless there is a new headline that starts moving us down. Can you please show your volume profile settings quickly? I feel like I should just start the show with this because this question gets asked every week. So my settings are super simple, guys. I move from number of rows to ticks per row. I set my ticks for 4 for 1 point on ES. And I go to total volume and I keep my value area at 70s, at 70%. And then I highlight the point of control so you guys can see it. And then you can change your colors however you see fit. You can play around with it. These are my settings. If you like them, great. I just like a pretty clean looking histogram. Just easy to find value area lows, value area highs, low volume nodes, high volume nodes, etc. And then you might want to do this if you've never played around with it. Zero out the histogram box. Otherwise you'll get like a square here that kind of is just annoying to look at personally. But if you want it nice and clean like that, I'd recommend taking the shading down, or the opacity down to 0. So same settings on visible range over here. It's just, that's going to be a slightly different indicator that goes by whatever's on the screen. Oh, I understand how to get it or have the settings, but how do I draw it? So if you like having a weekly volume profile like I do, currently Topstep X does not have the same indicator in TradingView that allows you to like say, okay, I want 1 week of volume, and it'll just auto do it every week. So my advice would be, when you're doing your prep going into the week, just grab the week's candles, and all you got to do is just draw it. So I can draw you the last 2 weeks of volume like that. That's all you got to do. And it stays there. It doesn't delete unless you delete it yourself. So I just do this every Sunday before I come on. I draw it, they stay, and you get months of weekly volume profiles. We've done a lot of shows, guys. Thank you for hanging out. That's months of volume from this show that I do with you guys every week. So that's how you do it. Super basic, not automated, but super simple. It takes you 5 seconds if you want the weeklies like I do. Is there another options expiration day sometime throughout the year? Yes, sir. They are every single month and every quarter. There are different options on the chain. And there's, I think, even yearly expiration, but basically the third week in every month pretty much is roughly going to be options expiration. Then you get into like quadruple witching and other things. Then you have expiration. So there's a bunch of dates. But a lot of the time we do on TopstepTV, we'll let you guys know when they're coming up. I always talk about options expiration because utilizing options order flow and things is a portion of things that I look at during my strategy, or how I actually day trade or swing trade, depending on time frame. Options are a big part of it. And because options make up about 50% plus of the volume every day on the indices, the ETFs and things like that, it's become a component of what drives price action. So I personally use it to help with additional decision making or just additional insight. For me, it doesn't provide like another bit of noise. I think there's some valuable data there if you're actually looking at options order flow. So I have incorporated it to be a portion of things that I look at day to day to help me make decisions on entries, exit, bias, things like that. But yeah, next options expiration will be in March. I can tell you the exact date if you actually want to know. Let me do that. It is March 21st is the next options expiration. So if you don't have that marked on your calendar, there you go. All right. What does MOC stand for? Market on close. So it's just is kind of that aggregate of a bunch of orders that are basically going to be executed upon close. And they start kind of pulling in around that, what is it, 2:50 Central time, technically. And they continue to kind of adjust until the close, but that's all. It just means market on close. Two questions for you from a newbie. My volume profiles look different than yours. Do you always use a 1 hour volume profile chart rather than 30 minutes? No. So these are going to be fixed. So this is the weekly profile. If I were to jump to a 30-minute, it's still the exact same volume profile. It may tweak just visually based on, how centered it is, how wide it is, but this is just the entire previous week's volume by price. This will adjust based on time frame because all it's looking for is the candlesticks that are currently painted on the chart. So if I were to jump to a 4 hour or a 1 day, oops, that's ugly. If I were to jump to a 1 day, ignore the weekly volume profiles, but a daily chart, you can get the volume profile for all of these candles on the screen from a 1 day perspective. It just changes how it's going to visually look. But I keep it at 1 hour for you guys. It's just easy to kind of look at the previous week, if that makes any sense. You can look at it a 4 hour too, but when you're looking at it like week to week and trying to find balance areas, I personally have just found an hour just visually just kind of works best for me to find ranges and things like that on a longer time frame without having to look at like a 4 hour. It's just, I don't know. I've gotten accustomed to doing it on a 1 hour when I structure my week. It's just an easy way to plan. When I'm structuring longer time frame, I use a 4 hour. I really don't even look at a daily anymore personally as much. As far as like a daily candlestick structure, I use a 4 hour for my kind of like long time frame. But keep in mind, guys, I'm truly a day trader. So 1 hour, 4 hour, executing on 5 minutes, and 1,500 volume is a lot of the time how I trade. How do I get my chart to look like yours? I mean, I think I've walked through most of it. You can change other than that, you can change your candlestick colors if you really wanted to. But I haven't really done a ton. I just changed the colors of my candles because red and blue is how I just prefer it to look. I don't know. I'm a weirdo. Everybody can keep their red and green. I prefer blue as my green candles. But other than that, there's nothing else I really have on here outside of, a 5 minute EMA or a 21 EMA. Like I said, I moved to a 1 hour, but this is a 21 EMA and it's green. And then I have the Topstep daily levels. And then I randomly turn VWAP back on depending on time frame that I'm looking at. But I also have like 6 VWAPs in different ways on other charting that I do. So sometimes it's just like too much noise on my Topstep X chart. That's because I really, I'm doing my week prep on here and then I'm executing. So it's like sometimes I don't want the extra noise because I have the extra noise other places. When you're looking at market profile, how much do you pay attention to the volume by time? If you're referring to like a TPO chart, I don't use it day in and day out, but it's something I will still look at. I am just much more of a volume by price trader than I am kind of, volume by time, if that makes any sense. The different periods throughout the day, I use more basic statistics of single prints and things like that just guide. It's more just things I know. I don't stare at a TPO chart personally. Some traders do, some traders like it. I'd rather have things that I can gather from a TPO, just kind of print slightly different things for me. Like when there's single prints, I'd rather just it pierce the box. It basically paint me a box of the area of single prints in the TPO in theory versus be staring at a TPO in addition to all the other charts I'm looking at. How do we get options data? There's a million ways, sir or madam. You can go as basic as opening up the options chain on something like SPX or SPY, looking at the big strikes for 0 DTEs or the next options expiration, mark them on your chart. Things that are getting a high amount of order flow. That's the free, easy, simple way that you can start getting an understanding of volume, open interest, and things like that. If you want to take it a step further, there's a ton of providers out there to actually look at, options flow in addition to, and finding ways of how you can incorporate that into your futures trading, if that's what you're doing. But there's a ton of, information out there. So if you're talking options flow of single stocks, that's one thing. If you're talking, gamma exposure, that's a whole nother thing. And they're different rabbit holes, to be honest. Is this data free from TraderAid? No, there's not going to be any provider out there of information on options flow or gamma data that's going to be free of charge. They may have a free trial, but there's always going to be a paid component to aggregate the data, put it in a nice pretty histograms for you, and give you access to it. So there's always going to be a cost associated. There's a million providers out there if it does interest you. I don't think it is necessary. As I said, it is a component of my strategy. Am I looking at it? Does it matter to me sometimes when I'm looking to be in and out of an NQ trade in about 90 seconds? Absolutely not. That is purely order flow based and what I'm seeing on time and sales and volume and delta. It is a much more longer time frame thing that would give me the indication that kind of once we broke let's say 6100s, like what are some of those areas that I think we could go to, or where am I seeing a ton of call activity, put activity? And one of those was down here on this low towards the 600 strike on SPY. And sometimes it's that stupid where you don't even need the damn options data. Think logically of some of these larger like 0 and 5 digit like strikes where it's like 605 or 600 or 610. Like it could be as dumb as that sometimes. So when you're seeing the 0 DTE flow at times and you see 600 just getting a ton of volume, it just kind of made sense on options expiration. On a 0 day, on a random Tuesday, it's not as relevant. But sometimes on OPEX, that's when the data pays for itself. Can you explain can you explain what the significance of being 5% below the all-time high is? I would if I thought it was significant personally. I don't know exactly what that statistic personally means, like how it actually would affect, or maybe some people just believe, it's a decent correction from the all-time highs. I mean, it could be as simple as that, typically when we make a new all-time high and correct 5%, that it's a good bottoming formation. Like I have no idea, but it could be something like that simple. What is your preferred setup to trade? A lot of the time, I mean, I love a good break of balance, but most of the time, if you guys see me, I think it was Thursday on Fast Markets with Dakota, there was, it might've been, yeah, it was this candle. So we went down, we had this violent move down on the 1 hour, and then we came back. I think I short like 25.50s, 125.50. And basically this type of reoffer and then a move down to a new low is like one of my favorite trades. You get a decent move down, you get buyers rebidding, you see them getting absorbed at a spot that makes sense. And I believe this was the previous day low where buyers just could not seem to build volume above it. And then we got another move down. So I shorted here and was basically making the play for a new low. And that's exactly what we got. So that's a setup that I kind of look for, because in a way you're going with momentum, but then you're getting a second chance to get into that trade at another spot. So you find, rather than trying to, in theory, fade this candle, you're looking for a spot to reoffer. Or I don't get these as much when I'm long, but it's like that extra spot that you get that pullback and an area that I can rebid it. Sometimes it just feels like we never really get a decent pullback to rebid. It's like we kind of do a little bit and then it just takes off. So I miss a lot of longs because of, just the natural buying momentum that's in the market sometimes. But that type of reoffer that you might have seen on Thursday and during Fast Markets is like my bread and butter trade. Nick, I start my new career on Tuesday. I've been trading for 3 years, mainly New York session only. Any advice on how to stay in the markets with a full-time career? Oh, well, I might be the wrong person to ask because I don't have a full-time career anymore. And I struggled with that work trader balance with my work-life balance as it just is. To basically, if I wasn't working my full-time job, like how do I then balance my personal life with trying to be active on screens? It's tough thing to do. Never let it. My advice would be never put your own job at risk or be risking so much of the hard work that you're putting in theory, to your 9 to 5 that you're willing to have a bad, like if you have a bad day trading, it shouldn't affect your work life because you had a massive loss. Like if you're trading that much, I would tell you to take a step back and focus on the thing that's actually paying the bills. For me, it really was, I had no choice in this world of having to kind of dive in full time. I mean, I guess I did have a choice because I could have kept, going back into my own world and doing the 9 to 5 thing, but eventually something clicked. So unless you have that day or that moment or that, type of consistency where you feel like trading can be a true kind of ancillary income day to day from your 9 to 5, you should never let trading kind of take over your time, your patience, your work life. Like, make sure that is priority one, because that's what's keeping the lights on and that's what's paying the bills. This should always be, unless you are truly trying to go full time, which I never recommend to anybody because it is such a miserable grind, and I'm going to always be 100% transparent with that. You should always try to be using things like Topstep and your, trading personal accounts and stuff as ancillary income that you can use that, pays for your lifestyle, for everything else outside of, keeping the lights on, paying the bills, and, going on vacation. This is kind of that next of everything else, that additional trip you can take, that extra nice dinner during the week. So you don't feel bad about it. That's how I would view trading with a full-time job. Oh, Nick, how much do you look at the previous day market profile, if at all? If you're referring to volume profile, I don't really look at it. I mark the important levels. So the previous day's value area high, value area low, and that's about it. The previous day's, probably the previous day's high and low too. So basically those four aspects of market generated information, I will have auto plotted on my chart. I don't really look at the volume profile just because it creates another aspect of noise as I'm looking through things and I'm trying to execute. It's just one less thing to worry about. So if I can auto plot the important parts of it with just horizontal lines, then that's good enough. I'm going to get to like one or two of these more, guys. We're getting to time here, and I feel like I've been talking for a long, long time. All right. Do gaps have to be filled? Tonight's gap up on NQ came close to filling the gap, but out by 2 points. No, gaps do not have to be filled. Look at other charts that don't trade 24 hours. There's a ton of gaps that are not filled. Most of the time, futures gaps do get filled, but we have absolutely no idea when and how and if they will get filled. But a lot of the time they do. They do tend to be filled a lot quicker than other ETFs, stocks, things like that. When they do have gaps, futures gaps just tend to be filled a little more often, but they don't always. There may be one that's somewhere lingering there with, contract rolls and things, who knows, but yeah, this is not a massive gap. Do I expect it to get filled? Yes. Do I have any idea when it will be? No. Do you trade the same size after hours compared to the New York session? No, absolutely not. Globex is so illiquid and it can move so slow. If you oversize with volatility, you're just asking for trouble. So when I have traded Globex, if I'm oversizing, if I trade my New York size, this is why I don't trade outside of the New York session. It's something I've tried to grow in as a trader to just stay out. Unless there is a real opportunity and I'm trying to actually, I feel like I can safely capture some points. I have matured in my trading to stay out of this time of the day. It's not my bread and butter. I'm not Mr. Slow Markets himself, Coach Dakota, and I've just never had success at this time of the week, this time of the day, after hours. Also, I am just trying, guys, I have a newborn, I have a 3-month-old. So the less time I am staring at screens, the more I'm happy, my wife's happy, and I get to spend more time with the little one. So me doing it after hours, I'd much rather take a peek on my phone than to sit here and try to be executing and doing trades. I have just lost so much money trading at this time of the day. And most of the time it's just because I think Jack and I were talking about it on Friday. It's so bid most of the time that there really is not a good two-way trade. And I very much am a two-way trader. Like, I don't really care long or short. But sometimes there's setups to the short side on Globex I just get absolutely run through because that's just the natural bid that it has. And I hate taking stop outs. I hate having starting red into New York because I made the decision to trade the Sunday open. So I try not to. I am a much more profitable trader when I stay away. if you've ever seen me trade, I need movement. I need speed. You guys have seen me like time stop out of trades or, in the red, like for a point or two, like before my stop, because we're just not getting the move kind of right here, right now, which is a lot of the time what I look for. I kind of want something to happen in the next few minutes for me to feel confident in the setup that I was seeing. If it is very much like order flow driven, and then we just kind of are lingering there, I'm most likely going to get, ran over by another large order that's going to come in when we're consolidating in theory. So that's kind of why. If I don't have the speed of the tape, like, it just doesn't work for me. All right. That is the last question. And I am tired, folks. So I hope this has been helpful. I'm going to do a quick recap of ES, and then we will get the heck out of here. Everyone can go enjoy the rest of their Sunday evening. So looking at last week, knowing that Friday was as violent as it was, I am looking potentially to find sellers reoffering in this kind of 60-60 to 60-65 spot. If we do build volume above it, then I would expect us to rotate at least up towards kind of the 6100s area. If sellers do reoffer, I would expect us to take out the previous week's low, perhaps even go down towards the 60-10s, 60-15s. If we lose that, I would expect us to go take out 59.50s, the previous, basically the very bottom of this old balance range that we've kind of been in, like this full rotation of some of these weak profiles, like down here towards 59.50s. Do we take out this low, go towards 5900s? It's very possible if we actually got a violent week. But given Nvidia on deck, I think the downside for the current early parts of this week may be capped unless there is a catalyst, unless there is news. I would imagine we find buyers, down here towards these 6,000s. So that's how I'm looking at things. I really appreciate everyone hanging out and having some fun here on Sunday nights. As always, it is very much appreciative. I hope this has been helpful. I hope you guys feel a little more armed to take on this week. Hopefully it's fun. Hopefully volatility is here to stay. Hopefully everyone trades safe tonight, actually makes it to the New York Open tomorrow. I will be doing the morning call with Eddie, Hoag, I think JD and everyone else that's kind of been doing that. So I look forward to kind of giving you guys another perspective after the overnight session tomorrow morning. And then I'll be on with Coach Dakota on Tuesday for fast markets. So everyone have a wonderful rest of your Sunday. Trade safe. And I'll see you guys bright and early tomorrow morning